So good morning. Please confirm that you can hear me, Pfizer and Luke. Can you please confirm me that you can hear me clearly? Pfizer and Luke, can you confirm that you can hear me? Pfizer, Luke, and Otendo Edgar, can you please confirm that you can hear me, please? I need to understand that we are together. Luke, Wachira, Pfizer, and Otieno, can you hear me, please? Please confirm in the public chat forum. So thank you, Otieno, for confirming. Please remind me, our last discussion was about what? Our last discussion was about what? Pfizer, Otieno, and Luke. Please remind me our last discussion. Pfizer, I don't know what's the problem. Luke, Wachira, and Victor, can you confirm that you can hear me? The rest, can you confirm whether I'm clear? Otieno, am I clear? Victor Kipkuru, can you confirm that you can hear me in the public chat forum?
Yeah.
Victor? Victor Kipkirui.
Yes, I can hear you, sir.
Luke Wachira. Please confirm that you can hear me. I don't know whether I'm talking to myself.
Otieno Edgar, can you confirm that you can see the note from your edge?
You see the note from your end. I don't know whether Victor Kipguru and Luke Wachira we are together. Because you have not replied. Otin Edgar, can you access the note from your end? Can you see the note from your end? Are we together, you people? It seems I'm alone in this class. Are we together? Otieno Edgar, Victor Kipkirui, Luke Bachira, are we together, please? Can see Victor, you are typing. Uh, where are your friends, Victor? Where are your fellow friends? Are they joining us or they have some issues with the portal and the fees? Victor, if you have an idea where your friends are, so let's just take a few minutes and discuss what we have, financial institutions and intermediaries. In this topic, mostly the major objective is for you to understand the functions of various financial institutions, namely mostly commercial banks, microfinance institutions, we have insurance companies, and we have the central bank. So in any economy or in a country, we have the major financial institutions, and at least you need to understand what to mean by them. So that's why we are told financial institutions serve as intermediaries by channeling the of individuals, businesses, and government into loans or investments. So meet those people who need money. As simple as that, if you have your money, you go and deposit it in a bank account, for example, another person who needs money goes to the bank and borrow. So that's why we say financial institutions are intermediaries between now those people who are saving and now those people who are borrowing. We are talking in the first place and often of funds for businesses and an intermediary between. Wait a minute. So financial institution is just an intermediary between those people who have and those people who need money. So we have the key customers. Wait a minute, I think So sorry for that. I was lost for some a few minutes. So I was saying, if you understand that financial institutions are intermediaries, then even it can be very simple for you, even when you're describing some functions. So you have the key customers of financial institutions. Customers can be anyone, can be an individual, can be a business, or even a government. So those are generally the customers that we are talking about. Now let's now go to our next discussion now, the commercial banks. Commercial banks, commercial banks is one of the major player of in a financial system. The commercial banks are the normal banks that we know. The normal banks that we know, where you go to get money, for example, or you can go and take a loan, etc. So what I need mostly for you to understand is at least the rules. The roles that we know for a commercial bank. So forget about all that statement given there. And for the loans, I think the easiest are the one that have been summarized down there. We are told rule number one, they provide a safe deposit for money and other valuables. That is already what we know. You can go and deposit your money in a commercial bank and even your other valuables. For example, maybe gold necklaces, people deposit them in a bank. Another one is they lend money to borrowers. That is another thing that we know. You can go and take a loan from a bank. So that is another function. Another one is they provide safe and non-inflationary means for debt settlement through the use of checks. In that, no cash is actually held. You can imagine in a case whereby you are paying, maybe for example, your suppliers in millions. So there is no, it can be very risky carrying that cash. Cash millions. We have a security issue. So checks is a safe mean of paying or debt or paying debts or settling some debt with other people. Instead of now carrying the cash in millions, you just write a check and you don't only need to carry a check, it's just a piece of paper, and now you can give that check to the other person who can now go to the bank and get paid. So that is a safe and non-inflationary means of debt settlement. Another one is they act as agents of the central banks involving with foreign exchange. If you go to any commercial bank, you find that they buy and they sell foreign currencies. If you have your US dollars and you need more, for example, Kenya shillings, you can go to a commercial bank and do that. But they do that on behalf of central bank. So it is a role of central bank to exchange currencies, but because the central bank cannot be everywhere, that commercial banks do that on their behalf. They exchange foreign currencies. Another one is they offer management advisory services, especially to enterprises which borrow from them. So if you go and borrow a loan from a bank, most likely they are going to be interested how you are going to use that money. If it is a business, they can give you some advice or maybe how to manage your business, how to make sure you manage your finances, because they are very much interested to understand whether the money they are giving you can be able to pay back in the future. So, just like I've said, what I need you to understand mostly are the rules. If it is commercial banks, can you be able to explain five or so rules of commercial banks? Then the next one, we have what we refer to as mutual funds. And mutual funds, I'm going to combine them with the next that is down there, unit trust. Mutual funds, unit trust is kind of, I think they are something that are very similar. So what is happening with mutual funds, we are told, yeah, a mutual fund is a professional managed type of collective scheme that pulls money from many investors and invests it in stock and other securities. So this is whereby a group of people, maybe for example, they come together, they pull money together, they give that money to professionals to manage that money, and mostly they do the business of buying shares and other securities at stock exchange. So people coming together, they put money together, they hire professionals to manage that money they invest so that they can get a return. And a very good example of mutual funds are the Stanbic, and we have even the mutual, although most of them they end up being the normal banks. After growing, they end up being the normal banks, but they started as mutual funds or unit trust. People coming together, putting money together, hiring professionals, and those professionals manage and invest their money for a return. So it is the same, very similar to a unit trust. Whereby you are told that unit trust fund is an investment scheme that pools money together from many investors who share the same financial objective to be managed by a group of professional managers. So people coming together, pulling money, they hire professionals to manage their money, to invest their money, to get a return. Then we have another one here down there, employee share ownership plan. So employee share ownership plan, what it means, mostly it is given to top management of a company to motivate them. It means that those management or those managers, they are given an option of buying shares of that company at a lower price. But those managers become shareholders. So it is to motivate them so that they can work hard, they can be efficient because they know they belong or they own part of that company. So to motivate those managers, they are given or they are awarded shares of that company. That's what we are told. It is an option by the employees of a company to buy the shares of that company at a price prescribed by the company. Normally, it is a price that is lower than the market price. We tell the managers, buy these shares at a lower price, and that will motivate those managers to even put in more effort. So that is briefly about those. As we go to the next financial institution, insurance brokerage companies. I believe you know about insurance companies. Those people who are going to come and tell you there is a risk that is likely to happen. Maybe you can experience fire risk, accident risk. So we are here on to take that risk. What you need to do is just be paying some small payment, either per year or per month. So in case that risk happen, we are going to cover you. We are going to give you some claims. You are going to claim from us, and you're going to cover for that. So that is generally how insurance company operates. You pay some payment per month or per year. We refer to them as premiums. In case there is a risk or that risk happens, then that insurance company can cover that risk. So that's why we are told they provide various types of insurance for their customers, and they periodically receive payments or what refers to as premiums from the policy holders. They pull the payment commonly, they pull the payments together, and in case those policy holders claim, then they are given that money. So it's like people coming together and at least reducing the risk. Because when I pay 1,000 per year or 3,000 per year, and I get an accident, it will be easier because even other people are contributing the same 1,000. So that insurance company can have enough money to now pay for the claims that will be made, because there is no way all of us can get accidents, for example. There is no way if it is a motor vehicle, the motor vehicles insured in a company can get accidents. So those people who have come together in that insurance company, they cover now those people who are likely to get a risk. So down there we have some highlighted functions. We are told that they accumulate large sums of money from premium. They provide cover for business risk. That is a major role, covering business, the various business risk. We have fire, we have accident, etc. Then another one is accumulate large sums of money from premium, and this acts as a long-term source of finance for both policyholders and other parties. Remember, so many people contribute in an insurance company. Those premiums per year per month. So that is a lot of money put together in millions, and in other companies in billions. So it becomes like a kind of a source, a long-term source of finance. Because in case in future those policyholders need money, they can always go to the insurance company. Even other parties, even the government can go to the insurance companies and access that money in case they need it through borrowing. So it is kind of CCNA, please mute your mic. It's kind of a long-term source of finance to even other people, including government. Then another one is an insurance firm is one that plays the middleman role between the policyholders and the insurance firms. So we have some insurance firms or some insurance companies that insures other insurance companies. Remember, even these insurance companies, they can face some risk. They can have some risk. So who insures those insurance firms? We have what we refer to as reinsurance companies. Reinsurance companies are those companies that insures other insurance companies. And in Kenya, we have Kenya Re. Kenya Re is now an insurance company that insures the insurance companies. Because even those insurance companies, they can be faced with some several risks. So who is going to insure them? So it means then we need to have another company that insures those insurance firms. Another one is they facilitate exchange of securities by linking policyholders to the insurance company. So securities are the issues to do with shares, treasury bills, treasury bonds, commercial papers. They are trading. So at least the insurance company can do that. They can facilitate the exchange of their securities between now the policy holders. So just try to understand at least 3 or 4 roles of insurance company, and the major roles, of course, is to provide cover for business risk. Then you have the others: financial institutions, investment companies, investment banks, and brokerage houses. So investment companies, you have had, especially in rental sector of the economy, whereby a company comes and advertise that, for example, they need people to come and invest in various. Sorry for that. Companies come and request people to invest, maybe in residential houses, construction of residential houses, others greenhouses. Those are kind of the investment companies that we're talking about. So there are so many in Kenya, especially in the residential houses or rental sector, whereby they promise you that when you do this, after some time, you're going to get your own home. When you do this, I don't know the issue to do with the greenhouse, you're going to start getting some returns. All those are the different investment companies that we're talking about. That's what you're told. These are firms that don't trade in goods and services, but they invest on a speculative motive. So that's why they can invest in securities, mortgages, and real estate. So real estate, mostly in Kenya, is the most common. Investment banks and brokerage houses. You're going to understand that when you're trading at, for example, Nairobi Stock Exchange, when you're trading at Nairobi Stock Exchange, we have there is no way in most cases you cannot be able to deal directly as an individual. You cannot be able to trade as an individual in that market. You need to go through brokers. We refer to them as brokers. So some banks, most of the banks, they act as brokers, but you have the actual brokers in Nairobi Stock Exchange. So what you do, you the broker trades on your behalf. So you talk directly to the broker, then the broker trades on your behalf at the Nairobi Stock Exchange. So that's what we are told. There are institutions that buy new issue of securities for resale to other investors with a view of making profit. This mostly takes place in the primary market where they buy a lot of floated securities, that is shares, and becomes in the second market, which determines market. Marriage house are institutions that comprise investment banks, which facilitate the investment process between these banks and the public. So what they do, they get a commission. They don't get a profit because they are doing that on your behalf. So what they get is a commission. Let's continue. We have the next one, microfinance institutions. Microfinance institutions. A minute. So microfinance institutions, you need first to understand why they came up. So I think now it is clear. We are told they refer to the provision of financial services to low-income clients. So mostly the major microfinance institutions that you know in Kenya, mostly we refer to them as SACCOs. The reason why SACCOs came up is because banks were very expensive. It was very expensive to even take a loan from a bank. So we need to come. We needed to have a solution, especially to now those people who are in the Juakari sector, those people who are at least we can say refer to them who are poor. They cannot be able to even open bank accounts. They cannot be able to take loans from a bank. So that's why SACCOs or the microfinance institutions were very important. So we are told a microfinance institution is an organization that provides small loans. Those people who need small loans, and most of these transformed into microfinance institutions that have proved that the poor are bankable. So in Kenya, the original or those microfinance institutions that started as microfinance institutions but later developed is, for example, the Faulu Kenya. Although currently again they are having some challenges, but now we have so many circles. Everywhere you go, we have a circle. So all those circles are microfinance institutions. So the challenges of why we needed those microfinance institutions, traditionally banks have not provided funds to clients with little or no cash income. Poor people fall below break-even point. That is, banks lose money on providing loans or in any transaction they make. Some of the clear challenges, poor people do not have collateral. So one of the challenges that was making banks to be so expensive is because when you take a loan from a bank, you need a collateral or what you refer to as a security. The title deed, the logbook, etc. Most people do not have those items. So circles had to come up because in a circle, it's not you don't need you don't actually need the collateral, you don't need the security. Mostly you just need another person to guarantee you. As simple as that. So importance of microfinance, they provide financial services to self-employed and low-income earners, that is true. They are the major financiers of small-scale businesses. They provide loans with an affordable rate. So the rate is at least affordable compared to banks. They supervise or inspect the business against which financial services is provided. So they supervise, they check, in case you take a loan and you go and invest in a business, they make sure they are supervising the performance of that business because it is from that business that they expect to get a return from. Then after that, we need to discuss a very important authority. This authority is referred to as a capital market authority. So capital market authority, if you go to Nairobi Stock Exchange, where shares are traded, where stock and other securities are traded, the authority that oversees how that stock exchange is operating is what we refer to as capital market authority. It's a very powerful government authority when it comes to a stock exchange. In our case, Nairobi Stock Exchange. the trading of currencies, the trading of shares, the trading of other securities. So they regulate now the operations of a stock exchange. So in that section, there is a history. You can go through it to fit. My concern now is roles, and the roles are divided into three. The roles are categorized into three. We terminate I share that section. So we have the first roles, the general roles, and we are told that the CMA has the responsibility of licensing and regulating stockbrokers, investment advisors, security dealers. In short, any company, any institution that is trading at Nairobi Stock Exchange, for example, it must be licensed by CMA. Another one is it is involved in the process of listing new companies. What do you mean by listing? If you want your shares of, if you want as a company your shares to be traded at Nairobi Stock Exchange, you must go through a process referred to as listing or quoting. So the listing or quoting of the various companies is done by CMA. Then another one is CMA is involved in the making of policies. So any policy that is affecting the stock exchange market, any policy that is affecting the capital market, the money market, CMA must be somehow involved. Another one is a CMA act as a watchdog for shareholders of listed companies. So if you are a shareholder, for example, of Equity Bank, which traded shares at the Nairobi Stock Exchange, who oversees the operations of those companies, how they are behaving, CMA ensures they do that. So companies cannot misbehave in case they are listed or their shares are traded at the Nairobi Stock Exchange. They are always under the watchdog of CMA on behalf of shareholders of those companies. Another one is the authority assisting the development of new securities in the market. In case we need new securities that are rising, the Bitcoin, for example, in case the Bitcoin at one time will be traded at Nairobi Stock Exchange, CMA must be very much involved. Another one is to act as a government advisor to the Ministry of Finance. So anything to do with the money market, capital market, CMA at one point must give their advice in case there is a policy, for example, the government want to pass, or maybe government need to know something or an information regarding money or capital market, CMA must be involved. It remove bottlenecks and create awareness for investment in long-term securities. So that is giving information to members of the public, creating awareness among the members of the public that they can do business in securities, in shares, in treasury bills, in treasury bonds. They serve as efficient bridge between the public and private sector, and they create an environment which encourage local companies to go public. And they can implement government programs and policies with respect to capital market. So those points are the general roles of a CMA. And you can go to their website after this, Capital Market Authority. You can know, you can understand better about it, and especially their major roles as highlighted there. Then now we have the other roles of CMA. So we have roles to stock exchange, roles to stock exchange in Kenya. So some of the roles here are repeated in our discussion above, like removing barriers, introducing wide range of instruments, decentralization of its operation, making sure at least operations are spread across the country, encourage development of institutional investors, provide adequate information to players in the market. So they make sure information is available to everyone in the market, and they license more bankers. So that is mostly their major roles are centralized at stock exchange. They control that market, they make sure everything is in order, money market issue, capital market policies, and they are in order. Another one is a role of capital market authority in the determination of share price. For example, you find that, for example, Equity Bank share is trading at 300 per share. If you go to another company, KCB, their share is maybe trading at 200. So who determines those prices? So you may think that CMA has a role to play when it comes to determining prices. That is a no. That's why we are told the CMA does not in any way influence share price of quoted security. CMA does not influence the prices of companies. The prices of companies, the prices of shares of companies is determined purely by forces of demand and supply and any other factor. Forces of demand and supply. Do we have so many people who are demanding, for example, share of equity? It means that price must increase. If we have few people who are demanding shares of Safaricom, it means that price must go down. So forces of demand and supply are the determinants of a share price of a company. So CMA is not at all involved in determination of that price. What CMA can do, only advise. You can only advise the company maybe on an issue regarding the price, but they don't determine those prices. So that is it. You are going to realize there is a major institution that we have not discussed, and I wanted that to be an assignment. Central Bank of Kenya functions. It is a very critical player in the financial system. And I need you, after this, I'm going to add a section for that assignment. You describe various roles of Central Bank of Kenya. There is no way an economy can operate without a central bank. It is if I believe you people, you are students, so most of you know where the central bank building is located. And I believe central bank building is very next to the KRA towers. And if you do even more research, you're going to realize that those two buildings, Central Bank building and the Times Tower, the KRA building, or where KRA is located, they are among the few buildings constructed to withstand any kind of earthquake, because there is no way an economy can operate without them. For example, central bank, one of the role is it is a bank to government. So government keep its money at central bank. So you can imagine central bank, for example, that building collapses, and or maybe a fire just come out from nowhere and burn everything. That can be very difficult for the economy to recover. So it is a very major player when it comes to the economy, when it comes to the financial system of the country, because central bank is still the one that supplies money, the notes that you have, the coins that you have, they are the one who are supplying. They are the one who keep foreign exchange currencies. In Kenya, if we have gold reserves, America, the US dollars, euros, all those foreign exchange currencies, they are the custodians. So central bank is a very critical player when it comes to the financial system and the economy as a whole. So I need you to at least know more about the central bank. You can go to their website. You can do more research, at least to describe the roles of a Central Bank of Kenya. So any question, please? Any question before we call it a day? You can use the public chat forum. Use the public chat forum if you have a question. If you're okay, just note that you're okay so that I can end the meeting, end the class.
Okay, sir.
Yes, I can hear you.
Okay, are you going to give us the makeup card for those? Are you going to give us the makeup card for those who missed?
I'm waiting until we do cut
Sir?
2 so that, yes, hello?
Uh-huh.
I'm waiting until we do cut 2 so that I can give
I'm
a
getting you.
makeup. I'm saying
Yeah, I'm getting you.
I'm waiting until we look at 2 so that I can give a makeup
Yeah.
to all of you who are going to, so that I can give a makeup to all of you who are going to
Yes.
have missed the both cut 1 and cut 2. So wait until we look at 2. I'm going to give a makeup after that. Is that okay?
Okay.
Yes, I'm
Okay,
going to
thank you,
give a
sir.
makeup. I'm going to give a makeup after we have done cut 2 so that I can give one makeup cut to cover those people who are maybe missed cut 1 or cut 2. Because even if I give a makeup cut now and then we do cut 2, then there are those people who are still going to miss cut 2. So I better wait until we do cut 2. I give a makeup cut at once. Any other question, please?
Okay, sir.
Any other question, the rest? So don't worry about the makeup cut. Everything will be okay.
Excuse me, sir.
Yes?
Hello.
Yes?
Hello.
I can hear you.
I wasn't available for the last sessions that we had. I wasn't able to access my portal. And as I was going through it, Nimona, you had given 2 quizzes. Can I still access the quizzes?
Yes, I'm going to check. If they are closed, I'm going to reopen.
Okay, thank you.
Another issue, another clarification needed. So after this, you can go back to the portal. I've already created that assignment. You can do, you still have time, 1 hour, you can do it now. And from there, we're going to meet next week. Then, in our next topic, it will be a mathematical topic. And I'm going to, before our next class on Friday, I'm going to have added most, if possible, before Monday, I'm going to have uploaded various videos. I'm going to have uploaded various audios. And I need you to download those videos. I need you to download those audios and the notes. You make short notes before we meet on Friday. So those videos have explained everything. So on Friday, it will just be some few clarification and maybe at least we do some more examples. So make sure you do that before you meet. Do not wait until we meet next week. That's when you are downloading those videos because I think there are several videos, 4 or 5. So make sure you download them, watch them, make notes. Even in those videos, there's an example done. Make sure you understand it so that at least on Friday we are going to take even minimum time to just make some few clarifications. So if there is no other question, please. So thank you for your attendance. So go back to the portal. You can attend the assignment now if you have time, and then from there we meet next week.